Gold prices are higher following Fed Chairman Ben Bernanke's much-anticipated meeting at Jackson Hole. He made no specific reference to any fresh monetary stimulus measure. Here to talk about the impact of the meeting with me today is Greg Ceponis, an analyst over at FMX Connect. Greg, any real surprises here today?
No real surprises out of the meeting. There was a lot of wishful thinking leading up today that we would see more from Ben Bernanke that he was really suggesting was coming down the road. Essentially, what he said was that inflation, they still projected to see near the target of 2%, and that while long-term unemployment remains a unique and big issue the country needs to deal with, that it may be better suited for fiscal policy than monetary policy right now. So he did leave options on the table for the future, but for the moment, he is just keeping his poker face and seeing how the market will react.
So is he buying time, Greg, since he said we might only hear more news until September?
I don't know if I'd say that he's buying time. The markets have been very unstable. The Federal Reserve just recently committed to near zero interest rates going through 2013. For them to dramatically reverse policy on quantitative easing might be something some people are talking about wanting, but it could really just increase uncertainties again. So I think for him to come out and say anything dramatic today could really not provide the stabilizing effect some people think it will.
So how will gold continue to react to this event?
Fundamentally, very little for gold has changed. It's true that gold would be a beneficiary of another quantitative easing, but less so than some of the other asset classes out there right now. People hoping for a big equity rally, possibly on a dramatic announcement, might go back to gold now that nothing really new has happened. Fundamentally, we still have lots of issues in Europe, and technically, it looks like the end of the sell-off is over. We formed a hammer on the candlestick chart yesterday, which is a classic bullish reversal pattern. We could really be right back rallying by next week.
Greg, what can you say about the corrections we saw this week?
Well, the margin hikes this time around were a little different from the margin hikes on August 9th. August 9th, the hike was announced in the overnight trading session. Gold was trading at all-time highs, and it sold off $90 almost immediately that same day, I think. This time around, it seems like the selling started a little bit in advance of the actual news. So either the market had a good inclination that the margin hike was coming, or it's possible that word did get out in advance somehow, because the official margin hike was announced Wednesday night, and gold sold off $100 Wednesday. Then yesterday, we were actually up about $5 or $6 on the day. So for it to drop $90 the day after the first margin hike, and then be slightly up on the day the second time around, suggests that this margin hike was handled a little differently, or that the market had a better idea it was coming.
Greg, you mentioned you expect a rally for gold. What about silver?
Silver does sometimes follow gold, so we would not be surprised to see silver follow suit. We don't have as strong an indication of a short-term rally from silver as we're seeing from gold right now. Like I said yesterday, we formed a hammer, which is a very strong bullish reversal pattern, and silver is not looking quite as strong as gold right now, which is looking to bounce strongly from this prolonged sell-off we just had.
Greg, what price targets are you looking at for gold?
Short term for gold, we're looking first at the 1830 strike for December gold, and if successful, we expect gold to continue from there back to all-time highs in the 1917 area. If we go through all-time highs again, a continuation to above 2000 is likely. If for some reason we reverse today, we would expect to return to test the 50-day moving average in gold, which is near the 1640 area currently, I believe.
Greg, final thoughts for investors?
Investors in gold shouldn't be afraid anymore. It looks like this was a very wild, wacky trading week across the asset classes. It looks like the near-term sell-off in gold is probably over. The last time we had a margin hike, gold sold off $90 and was trading back to the highs in a couple of days. This time around, the drop was about twice as as far, but it still seems likely to come back. Fundamentally, nothing has really changed. The continuing problems out of Europe that have been driving gold and the sovereign uncertainties we're seeing around the globe remain the same as they did a week ago.
All right, Greg, thank you for joining us, and thank you for watching. You can email me at newsfeedback@kitco.com for Kitco News. I'm Daniela Cambone.